Good morning, 5-minute traders. It is October 20th, and pre-market here, we're looking at the bonds. Bonds are trading 152.04. We would like to start buying these again from the one, and basically I'm going to use a bracket here of 151 up to 152. I want to be a buyer of the bonds in this range. So take a look at that range. We're getting near the top of that. And depending on your aggressiveness and your bank account, your capital, how aggressive you want to be, and the onset is up to you. But I'm going to start picking up some near 152, and I'm going to be in this trade down to 151. And I'm wrong if we close below 150 on a weekend close. So that's a Friday. So, for example, today if I bought some at 152, 151 and a half, and 151. 1, 2, and 3, 3 being the largest size down there near 151. I'm going to be wrong if it closes below 150 today, Friday. Now, that means next Friday also, I wouldn't even really care unless it was Friday of next week. So how do I manage a trade like that? Well, it's pretty easy. Like Friday is much more important to me than a Tuesday close. So if we tick down to 149.29 here on next Tuesday, and I'm long basically at 151 and change, small change, then, I'm not really going to do much until the next day. So I'm going to make sure we close below 150 for 2 days, 3 days, and then Friday, if we're still there, I'm likely going to be very wrong. So that's the way that I'm going to manage this. I think that interest rates aren't going higher. I just don't think, I think the Fed is painted into a box. Matter of fact, I don't even think they're going to raise, and they're not going to raise at the end of this month. They have their meeting coming up 2 weeks from 2 days ago. So November 1st, I believe, is the date. The 31st and the 1st is the next Fed meeting. And then after that, they don't meet until December. I don't think they're going to cut rates here, and I don't think they'll even do it in December. I think they're just so painted in. They have nowhere else to go but keep the rates falsely lower as long as they can. So, and then pass it on to the new Fed head, whoever that may be here, and that will be chosen in 2018. So that's the trade for the day. Look for to pick up some bonds, long side, which is betting that interest rates are going to remain low. And just a few days ago, we were up here at 154, and we've come down now $2. Now I'm looking for an area again. As long as we hold 150, I'm looking for an area to pick it up again. And if you want to let's just look at this chart on a little bit longer time frame, just so you can see where this has been. And I just don't think that, again, it's more of I'm looking at the chart, but I'm also looking at the game. For them to keep the stock market high, they've got to keep interest rates low. It's as simple as that. If you start giving the suggestion that they're going to actually raise rates, then you would see a real move lower, but I just don't see that happening here in the bonds. Again, here's the 150. This is back May of this year. That was holding 150. So you can see we've got a lot of friends back here at 150. This is really the bracket that we've been in. I would say the bracket, from both the time perspective and price perspective is really been locked in this area right in here from 150 up to 156. That's really your wide range. So that's it. Have a great day. If you have any questions, drop me a line, Matt at OneMinuteTrader.TV, and we'll see you on the other side.